Hello and welcome to Markets Today, the show that keeps you up to date with news around stocks, bonds, investment opportunities in order to enable you make sound investment decisions. My name is Terry Ann Chabet. Now, the International Monetary Fund says the coronavirus crisis has caused a global recession. Wall Street has had its worst month since the year 2008, with the S&P 500 falling 12.5% in March as the coronavirus devastated the global economy. Economists across the world agree that the virus outbreak has become one of the biggest threats to the global economy and the financial markets. Investors are also in fear that the spread of the coronavirus will destroy economic growth and that government action may not be enough to stop the decline. Now, joining me on Skype to have a look at the global picture as well as the impact to Kenya's economy is Isaac Kamau, who's an investment associate with Nabo Capital. Isaac, thank you so much for making time to join us. Let's start with the impending global recession. Now, some had predicted a short and deep market crash, but the IMF has already declared it a global recession. What do you read into this?
So, first of all, thank you for having me today. I think it's very clear that 2020 will definitely be a tough year for the whole world in terms of economic performance. So, for Q2 and Q3, we actually do expect negative growth in much of the world. This is largely because of the shutdowns. Because if you think about it, it's effectively telling people you cannot go out, you cannot spend money. You cannot work as much as you would ordinarily have worked, and this in aggregate affects the entire economy and touches on virtually every country in the world, primarily those which actually have a high level of cases, as well as even those which maybe are not affected, because at the end of the day, they do have to, export to and import from the affected countries. So it's really going to be a pretty tough environment, at least for Q2 and Q3 of this year.
Let's bring that conversation back home and look at the Kenyan context. Of course, given the events of 2008 to the global financial crisis, what should we expect this time around as the Kenyan economy?
So we do expect some challenges. Now, I think the saving grace for Kenya to some degree could be our demographics, in the sense that we have a much younger population. So the infection rates might, peak to be similar to what we're seeing in other countries, but the level of severity might not be as bad. And so we do expect an economic impact, but it's not likely to be substantial as for the other countries. Another thing that sort of shields Kenya to some degree and has its good side and its bad side is the fact that a total lockdown in this country might not be that feasible because a large section of the population lives on day-to-day earnings, essentially. So there might be a bit of hesitation to do a complete lockdown of the entire country, and this could, protect the economy somewhat, although it will come at the expense of faster rising cases. So we do expect an impact on Kenya, and we've actually seen the central bank actually downgrade its forecast of growth this year from 6.2% down to 3.2%. So there is an impact. There is an impact on the Kenyan economy.
All right. Of course, always good to know that, if there is, they usually say when the world coughs, then Africa gets automatically, bedridden, so to speak. And it's good to hear that, you think this recession will not have such a big impact to the Kenyan economy. But just tell me, when the world economy slows down, what happens to Kenya?
Kenya will definitely slow down, and it will be significant. But it might not be to the same degree that we're seeing in a lot of other countries. So at least for Q2 and Q3, we do expect substantial slowdown, and it will be felt in virtually every sector by almost everybody. So there will be, yes, an impact to Kenya, both directly and indirectly. So there's a direct impact from the shutdown, as well as the impact from other economies slowing down. As I'm sure us have seen, we are already experiencing challenges with our exports in terms of tea and flowers because the end consumer is no longer buying it. So we can no longer send tea to England or flowers to the Dutch because that demand really isn't there. So really, in this globally connected environment, no economy is immune.
Mm-hmm. What's the flip side of that, though? Given what you've just talked about, reduced consumer spending globally, there is, of course, a sentiment that locally as well, there is already, some sort of shrinking in consumer spending. And I'm just wondering what your thoughts are in as far as that, how that will affect our local economy.
Yes, so we have seen that already start to take place locally. Consumers are not spending as much, primarily because number one of the shutdowns, and because of this, people are not going out to spend. Number two, there are certain individuals whose incomes have substantially, been affected by this environment. So the overall impact of that is that the Kenyan consumer really is not going to be in a position to spend over the coming months as they did in the past.
Global slowdown in manufacturing, especially in some of the bigger manufacturing countries like China, etc. What are some of the downsides of that? But even more importantly, what does that then mean for Kenya's manufacturing sector? Are there any upsides?
Okay, so in terms of what we've seen in the industrial sector, there has been that decline all across the world. So what does it mean for Kenya? So for Kenya, I'd say there are two sides of the coin. One side is because other countries are maybe not able to get as much out of their factories. There's an opportunity for some Kenyan players to potentially grow their market share. However, on the other side, there's the fact that now supply chains have actually been negatively affected. So you may want to produce something in Kenya, but ultimately you need some inputs from China. Now you cannot get those inputs as easily as you would have at the moment, and so there is that impact. So it's sort of there's two sides of the coin. On a net basis, I believe it will be a negative. Also, given the fact, tying it back to our earlier conversation on the consumer, you're producing and you have the opportunity to produce, but who is really going to buy your product? So there will be a negative impact on Kenya in that sense.
All right, tell me your opinion. Is it a good time to invest, for instance, in the capital markets? Globally, looking at how it's the bear markets that we've been seeing in recent weeks. What would you tell somebody who's already investing, and two, somebody who hasn't yet gotten into the markets?
So I think this is a very uncertain time. No one knows when it's going to end. Now, while we have seen the markets trend downwards, and right now various assets look a bit cheap, and it seems attractive to invest, the question is how long is this going to last for, and will it get worse? So at the moment, it's a pretty uncertain environment. So generally, what I'd say is keep on watching the environment and be ready to come in when things do start to get better. But at the moment, it's still a very, very unclear picture.
All right, so are you cautious or cautiously optimistic, or just wait and see? And then perhaps what would you be looking at in terms of, we're seeing globally stocks that are in healthcare and technology seems to be taking a little bit of a surge there. Locally, what would you be looking at? And of course, that comes off the back of whether you're looking at this cautiously or from a cautiously optimistic perspective.
You see, so in the short term, I'm a bit cautious. There could be opportunities over the medium term within the coming months. But however, within that caution, there's also the fact that this pandemic has also provided an opportunity to companies in certain sectors. Now, on our local exchange that you can directly invest in at the moment, but like you said earlier, healthcare companies look good, technology companies, especially those which sort of support this whole work from home trend that we're seeing. So those might even look attractive at the current moment. But the long term, I think in terms of investment on a sector basis, I think the focus really should be on the fact that we are currently in a bit of a low place. So coming out of this, what opportunities will there be? And we believe that these will be across all the sectors that are available.
Okay, thank you very much. We've been speaking to Isaac Kamau, an investment associate at Nabo Capital on Markets Today. My name is Terry Anchebet. Enjoy the rest of your viewing.